Welcome to Learning Insights by All Cloud. This is our platform where we're relaying our thoughts on the lending industry. Today we'll be talking about the microfinance industry in India. Microfinance institutions are perhaps the first lenders to any borrower, playing a pivotal role in getting people to the fold of credit. Every year, microfinance institutions fund a lot of people for the first time. Most of these loans, about 96% of these loans, are for income generating activities, which means that microfinance institutions are really working at the bottom of the pyramid to bring in financial inclusion. Not just in the area of financial inclusion and furthering of the financial inclusion goals, microfinance institutions have played a very important role in the lives of these borrowers, from being those persons that have been very helpful during the pandemic, to providing credit, to offering various products for betterment of their lives and livelihood. Microfinances in India are spread across all 33 states, 5 union territories, and more than 650 districts across the country. The scale of penetration of microfinance institutions in India cannot be undermined. They are a good force that are working very diligently to further credit and reduce the credit gap in the country. MFIs, representing all legal forms like trust societies, Section 8 companies, MFI, NBFC MFIs, and societies and cooperatives, together have a total loan outstanding portfolio of 3 lakh crore. They have about 14 crore borrowers, and just last year they were able to bring 117 lakh new borrowers to microcredit fold. These numbers are huge, and the contribution of microfinance institutions of generating this credit across the country is huge. Microfinance institutions work very closely with their borrowers, and their borrowers, if you look at 75% of the borrowers are in the rural area, and about 25% of their borrowers are in the urban areas. Microfinance institutions cater to their most immediate economic needs. They give collateral-free loans for income generating activities like purchase of raw material and addition of some assets to further their business goals, and also for emergency loans like medical, school fees, purchase of certain household material. Microfinance institutions work with the borrowers very closely, and they are able to understand the need of funds, and that's where their efficiency in delivering credit and collecting it back is enormous. Now they're using technology to further their goals, bringing in paperless operations, because microfinance borrowers are not exactly tech savvy. They understand technology, they understand the merit of technology, but may not be able to do all the onboarding and document submissions on their own. So microfinance institutions who are progressive are looking at technology that can help out in bringing ease in onboarding, like paperless operations, digitizing of KYC credits, moving applications very quickly from onboarding to credit assessment, because there is a new regulation that has come in April 2022 that all microfinance institutions need to have an understanding and a detailed credit assessment of their borrowers. No loan outstanding should be more than 50% of their household income, which means that they need to work with the borrowers to understand and document what are the income sources and what are the expenditure, and then of the residual value that is there, their loan serviceability should be achieved from that. So more and more microfinance institutions are looking at technology to improve their operations. Direct debit disbursements using banking channels have taken a great leap from 2016, where after demonetization everything moved digital. These microfinance institutions have taken that. More than 85 to 90% of the disbursements of microfinance institutions across board is now through direct debits, or they've deployed UPI as a means to fund to their borrowers. Collections, a lot of improvement has been in the collection space, where microfinance institutions have deployed direct debits, UPI autopay, QR code based collections, and also they have used the infrastructure of fintechs and BBPS to collect money, so the physical money can be converted into a digital transaction and the reconciliation is sorted. That's been one of the most important innovations for collection in this industry, from being a more cash intensive group meeting, group collection kind of mechanism where cash was collected and then it was transmitted to the branch, it is moved digital by multifold. So definitely there is a lot of interest amongst the microfinance institutions to embrace technology, especially those technologies that can bring a lot of improvement in TAT, because again, microfinance borrowers need cash with an urgency in certain scenarios. If they are not able to provide that particular credit at the right time, there is always a chance of them going into the informal sector. So definitely TAT is something that everybody is trying to improve, and by use of technology that can definitely be achieved. So definitely Aadhaar based KYC, bank account verification using penny drop services, validation of their data by collecting it and transmitting to an integrated system, directly transferring the proceeds of the loan to their bank account. All of these are very instrumental, very important for microfinance companies to embrace. Along with this, the ancillary services. How do you know the location of your borrower? So geotagging, geolocation mapping for utilities, communication by SMS, WhatsApp calls. Doing a voice call, an automated voice call is a fantastic use case in this industry, because the borrower will be able to just pick up the call when it is received and hear about their upcoming reminders, dues, and any notification that the company wants to send. So there's been a lot of change in the regulations for microfinance institutions, as these are regulated and financially important entities. Definitely all those guidelines that apply to a normal NBFC in terms of data monitoring, data protection, infrastructure management, and security apply to them. Having those best practices deployed across their digital assets should be an important priority for all microfinance companies. Investing in scalable technology that will help them to have those mobility functions working seamlessly with the backend systems, like an integrated approach should be taken up. Along with that, since there are so many regulations that are coming up, especially we also discussed about the April 22 regulation for understanding and doing a detailed credit assessment of the borrower. Multiple regulations are affecting microfinance companies in their operations. So Digital Data Protection Act, the Fair Lending Guidelines, all of these have to be factored in while designing policies. And definitely microfinance companies, as they complete the cycle, because how they work as a group is formed and there is a cycle of loans that are disbursed. After a couple of cycles, the evaluation of borrower to migrate them to individual loans or MSME loans should be also looked at as priority. With having said all of this, there is also a challenge of generating the funds. Microfinance institutions definitely the cost of borrowing in the last couple of quarters has increased. So deployment of innovative solutions like working with banks as a banking correspondent, so to increase the reach and have a larger set of borrowers that they are addressing could be an option. Co-lending is a fantastic option for microfinance companies, where they can co-lend with banks and financial institutions like larger NBFCs. NBFCs and microfinance companies should definitely leverage co-lending as an option. They can get funds at a cheaper rate, then it will be beneficial for their borrowers. And also working with banks, they'll be able to add to the priority sector lending guideline or the mandate that every bank has to fulfill. So working with the microfinance institutions to further credit is a win for the bank, is a win for the microfinance institution as well. Well, in a country as large as India and with a growing population, microfinance institutions are very strategic to advancement of financial inclusion goals, reduction in poverty, and adding to the entrepreneurial spirit of the country. So the first lenders, they provide 96% of their loans are for income generating activities. I think that's where the importance of microfinance is there. Furthering their goal along with technology, advancement, improvement in processes, operations, and definitely having served the borrowers with a better rate, better functionality, should be prioritized, and we look forward to the space, working closely with microfinance institutions to improve their processes using technology. So Lending Insights by AllCloud will come up with more insights on microfinance industry as we go forward. I invite you to keep track of what's being posted on our channels, and definitely tune in for more insights on lending. Thank you.